Good morning, trading world. It is March 21st, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title of today's outlook is Danger Zone. Why danger is on both sides of the market right now. Yes, we are in a pretty dangerous spot right now. That spot is laying outside the weekly market maker's expected move. Why is this such a dangerous spot? The further we push outside the weekly market maker's expected move, the more money managers have to hedge. And they have to hedge a basket of stocks. And the way you hedge a basket of stocks is by buying futures. The further we push outside of the expected move, the more futures they have to buy. This could begin a perpetual cycle that could push us into orbit if it continues, if we aren't high enough already. As long as we are above that 52.63, that danger persists. Now, the other part of the danger is going back down to 52.63. Is that level could draw like a magnet as we get closer to it. And that draw could snowball momentum going toward it. And like a snowball going downhill in snow, it could get bigger and bigger. And that draw could increase the momentum so much that we overshoot. Now, the momentum gain could help overshoot that 52.63, triggering a free fall. If we get back down to within 5 to 10 points of 52.63 before the cash open, we have a chance to limit the follow through from yesterday. Otherwise, be prepared to ride the rocket some more. If we get back on the rocket today or tomorrow, my targets are between 53.34 and 53.56. Now, from the pre-market yesterday, I stated my goals. If the market went higher first, I was looking to short. So my goal, it was to short about 4 contracts selling the 12 April 24 520 calls and buying the 518 calls in the same expiration at $1.39 credit. I set that order up before the actual FOMC announcement. However, we rocketed up so much and so close to the close that it did not hit my number, and I did not get confirmation of at least 2 triggers. What I did ended up doing was chasing it. Instead of 4, because I'm going a little bit outside my rules on field, I didn't execute 4 contracts. I executed 1 contract at $1.25 credit. I have no problem risking that, but if we break or close above 524.28 on the SPY, I will most likely close that position and think about another entry sometime after 10 a.m. or wherever I see confirmation presents itself. Also, if we stay below and I do see the confirmation early, my goal will be to execute another 4 to 5 contracts in. So that brings us to the intraday zones. Let me bring all that stuff up. All right, here we are back with the intraday levels. Start on the resistance side. We have our Jack resistance zone at 53.13, Queen resistance zone at 53.22, and King resistance zone is at 53.37, and it spans all the way up to 53.48, and I'll write that in up here, 53.48 is where it goes up to. Now on the support side, we have our Jack support zone at 52.82, Queen support zone at 52.72, King support zone is 52.57 and spans all the way down to 52.46. The important battle area or no man's land that we're starting off in today spans between 53.13 and 52.82. In this no man's land, the more time we spend below 52.97, the more it speaks to a bearish reversal. The more time we spend above 52.97, the more likely we are to push to new highs. On the other hand, if we drop lower, the support battleground is between 52.46 and 52.17. In this battleground, 52.33 is the line of demarcation. The more time we spend above 52.33, the more likely we are to retest and push to new highs. The more time we spend below 52.33, the more likely it is we push lower. Today's reaction areas are as follows. The first one is 53.15. The next area is 52.92. And below that is 52.76. And below that we have 52.55. Now I expect battle to be between 52.97 and 53.22 for a good portion of the day. If we start to fade, it could carry overnight and spill into pre-market Friday. We do have jobless claims report at 8:30 a.m. that is capable of knocking the market back down to earth. Then an existing home sales report at 10 a.m. that could do the same. The way I see the scenarios today are as follows. The first most probable scenario is going to be our rounded reversal day type. And that rounded reversal day type, we're going to start with a gap up from the previous close or actual futures open. And we're going to continue up. And that continuation up could put us, we could have a couple minor little pushbacks, but it could pretty much get us up to that 53.22 and even higher today before we get to that midday chop area where we kind of sideways, go sideways for that lunchtime chop area. And then based on how things went yesterday, probably some spillover in these big air pockets that we have, we could see trying to think how to describe it. We could see a rump down where we go down, try to get a sharp push back up, and then even a sharper fall through air pocket, and then a big kind of grind back up, and then even a steeper fall, and that could go on all the way into the close and overnight, getting us back down to this area at some point through this big air pocket overnight. So that's the most probable scenario that I see, which is our rounded reversal day type. And hopefully pretty soon I plan to have guides outlining all the specific items that I look for on these different day types and how to kind of spot them ahead of the open to be prepared for it. So that's our rounded reversal day type. The next most likely scenario is going to be our trend day up, and with the trend day up, we also start with a gap up. But on the trend day, we're going to start off after the open and immediately try to go back and close that gap to some degree. And we're going to find support on or before that previous close and take off to the upside. We're going to take off to the upside and at some point reach our midday chop. We go sideways, and then what will happen, the second part of the day, we'll start off with a head fake that could probably carry us down a decent ways, and at some point pick back up on the primary trend of the morning. And that's how a trend day looks. And our last scenario is going to be a range day, and that range day could get there are so many different paths for a range day. It's very hard to plot, but the pretty much gist of a range day is that for me, my long signals and short signals are valid, and the whole principle is that we kind of set a high and set a low and bounce in between. So we could pretty much do something like this a good portion of the day. And then it could have a bias to it, where we could have a bearish bias to a range day or a bullish bias to a range day, where we spend more time. If it's bearish bias, we spend more time pushing lower. If it's bullish, we spend more time pushing that upper boundary. So that's what I'm looking at today. That's what I'm preparing myself for. Again, the most probable scenario to me is going to be the rounded reversal day type. So with that in mind, as always, I like to remind you that your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you face in each position and in the current market conditions. We manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.